I just wanted to get your thoughts first on what we're seeing in terms of the trade dispute between the US and China and whether or not you're starting to see that affect your overall business and perhaps Bata's supply chain.
We don't see a lot of good coming from this trade dispute, and I'm sure I'm not the only CEO who's going to be telling you that. I was saying a little earlier today, a win-lose attitude in a trade war always ends up in a lose-lose. And the issue is, in my opinion, a lot of the gesticulation around trade issues are made for local consumption in the US to a constituency that feels good about hearing these things but does not comprehend its full implications.
Have you had any pushback because of what you're seeing in terms of your expansion plans, or are you still going full steam ahead? We teased earlier the fact that you've seen the Prime Minister of Malaysia wearing your shoes. I'm guessing that perhaps that could be boosting sales a little as well.
I would have liked him to wear some of our more premium shoes than the $3 slippers, but it's still a good thing for the brand. No, it's not preventing us at all from pursuing our expansion plans and our expansion strategy. The concrete impact of the trade war for us is very hard to fathom and quantify at this stage, because it has, some contradicting impacts as well, because a weakening dollar for us who are denominated in dollars can have a short-term positive boost, but long-term, as we all know, and we all know from macroeconomic history, it's never good for anybody. So no, we are pressing ahead.
You mentioned there the premium brand. Are you seeing more growth coming through in that? I mentioned that you're starting to see, I guess, a balance coming through, which is helping your overall share price. But is that what is starting to drive growth? Is that part of your massive expansion
Absolutely.
plans?
Our strategy has different components, but from a consumer behavior standpoint, what we want people to trade in, trade up, and trade across. And we have ample evidence that it's working. I mean, for the past 3 years, we've been growing average price per unit at more than 3 times inflation rate. And our gross margin is expanding almost 90 basis points year on year now for the 3rd year in a row. So we're having encouraging evidence that shows that that strategy is bearing fruit today.
You also have an assistant, Angela, but I understand there's a male version, Roberto, as well. You're focusing more on Angela. Tell us about Angela. And is the fact that it's a woman, is that because women more like shoes, if we're going to go by the cliche, or that they're the ones controlling the purse strings in terms of household spending?
All of the above. So today, a significant constituency of our business is women. And also, a bulk of the growth in the future, particularly in emerging markets, will be coming from women. So this is a deliberate strategy from our side. But we also know that women, as you well say, controls the purse string. And men who are in rather C and D social categories tend to be highly influenced in their fashion choices by women. So Angela has a double whammy, if you like, in terms of potential for us, is more consumption from her and more consumption in her social ecosystem.
Okay, so let's talk about some of your expansion plans, because you are expanding into China and Southeast Asia is still obviously your bread and butter. Any plans to move to the US?
No. We have a strategy which is what is called Win Everywhere, which is continue developing our positions in Europe, which is a strategically important market for us, and continue doubling down on our expansion and our growth, both in top line and bottom line in Asia, which already represents more than half of our business today. US is not in our plans today. The cost of growth is extremely high. It's a very contested market where our brand is not known at all. We believe that our efforts and our resources will have much better leverage in other parts of the world. And the good news is that we have plenty of expansion opportunities in the medium and the long term.
Alexis, David here in Hong Kong. Since we're talking expansion here, I understand you have 5,300, about stores in the markets that you serve. Do you see that store count increasing? In other words, do you continue to see yourself pursuing that model of building stores with your franchise partners, or does that decrease because of just shifting patterns of buying things online?
We embrace the omni-channel continuum entirely. We don't believe all of the footwear consumption is going to move online. We believe a significant chunk will move online and is moving online. But there will always be a future for the brick and mortar store, because the consumer today is either browsing online and shopping offline, or browsing offline and shopping online, and you can have the four-way contribution in that sense. So we are embracing the full continuum of the omni-channel experience. And today our online sales are actually growing 80% year on year, which is pretty remarkable. And the more important thing is in our digital strategy, which is we call from anywhere to anywhere, we are making sure that online sales are margin accretive. And you might or might not know that, but the majority of fashion retailers are losing money in their online sales, and that's not the case with Bata. We actually have our margin in online sales at 400 basis points ahead of our brick and mortar sales. So to make a long story short, omni-channel, both online and offline, and there will always be a role for brick and mortar.
Alexis, before we go, I just wanted to ask you very briefly, you've been CEO of Bata for 2 years, but prior to that, you were in Heineken.
Yes.
What are the differences between running businesses like that, just very briefly, and what have you learned from Heineken that you can bring to Bata?
You know, I've done 17 years at Procter & Gamble, I've done almost 6 years at Heineken, and I'm closing in on 3 years with Bata. It's a very different business because fashion retail is uber discretionary. When people are afraid for their jobs or they're pessimistic about the future, one of the first things they cut down on is fashion. And you have to cope with a market size that fluctuates quite a bit. Within food and beverages, markets are a bit more stable. You do have a bit of a market share game, but it's never by the same magnitude. So that is why in a category like fashion and like footwear, you have to keep fueling desire at any point in time to make sure people keep considering you and reconsidering you all the time.